This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The 5 biggest global oil majors are moving to cut costs, jobs and share buybacks as falling oil prices threaten to make shareholder payouts unsustainable without increasing debt, analysts said. Chevron, ExxonMobil, BP, Shell and Total Energies have pledged high returns for the past decade to avert an investor exodus as fossil fuels lost their appeal. But maintaining those generous payouts, which have topped $100 million annually since 2022, has increasingly been funded by debt as energy prices retreated from highs caused by sanctions and supply disruptions in the wake of Russia's invasion of Ukraine.
China is building oil reserve sites at a rapid clip as part of a campaign to boost crude stockpiles that increased in urgency after Russia's Ukraine invasion upended global energy flows and has accelerated this year, according to public data, traders and industry experts. State oil companies including Sinopec and CNOOC will add at least 169 million barrels of storage across 11 sites during 2025 and 2026, according to public sources. Of that, 37 million barrels of capacity has been built, the sources show. Once completed, the new sites will be able to store 2 weeks of China's net crude imports, according to Reuters calculations based on Chinese trade data, a significant volume as China is by far the world's biggest oil importer.
Moving on to the top news in the energy sector.
Indonesia took another step towards launching biodiesel containing 50% palm oil-based biofuel, B50, by concluding laboratory tests, an energy ministry official said on Tuesday, as the country aims for implementation next year. Palm oil-based biodiesel is currently mandated at 40% blend, B40, but Indonesia wants to increase the level to reduce its reliance on imports of fossil fuels. The laboratory testing involved running an engine using the B50 fuel and was concluded in August. Officials will now carry out road tests, the Energy Ministry's Bioenergy Director, Edi Wibowo, told Reuters.
The International Energy Agency on Tuesday cut its global forecast for renewable power growth by 2030 by 248 gigawatts from last year's outlook, citing weaker prospects in the United States and China, even as solar power continues to drive record additions. Global renewable power capacity is now expected to rise by 4,600 gigawatts by 2030, down from the 6-year forecast of 5,500 gigawatts in 2024, with solar accounting for about 80% of the increase, the data showed. The downward revision is mainly due to an early phase out of U.S. federal tax incentives and other regulatory changes, lowering the IEA's U.S. growth expectations by almost 50%, while China's shift from fixed tariffs to competitive auctions is squeezing project economics. Next, we have the top news in metal markets. Copper prices rose on Tuesday on concerns over supply from top producer Chile and major supplier Indonesia, although a stronger U.S. dollar kept the gains in check. 3-month copper on the London Metal Exchange rose 0.3% to $10,679.50 per metric ton by 0717 GMT. On Monday, the metal hit its highest since May 2024 before easing. Miner Freeport said on Sunday that 5 workers, missing since a mudflow disaster at the Grasberg copper and gold mine in Indonesia last month, were found dead.
China's central bank added gold to its reserves in September for the 11th straight month, official data from the People's Bank of China, PBOC, showed on Tuesday. China's gold reserves rose to 74.06 million fine troy ounces at the end of September from 74.02 million ounces at the end of August. Its gold reserves were valued at $283.29 billion at the end of last month, up from $253.84 billion at the end of August, the PBOC said.
We will now look at the top news in the agricultural sector.
The Trump administration is expected to announce a plan as soon as Tuesday to bail out U.S. farmers stung by trade disputes and big harvests, with the initial outlay potentially totaling up to $15 billion, according to sources familiar with the matter. The plan, however, could be difficult to roll out as an ongoing government shutdown prevents the kind of congressional action needed to approve such a large payout, and existing government reserves fall short, the sources said. Farmers generally support President Donald Trump but have pressed his administration for trade deals as China continues to spurn U.S. soybean purchases amid tit-for-tat tariffs, and a record corn harvest threatens to sink farmer profits.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.